American investment management firm Ark Invest describes Tesla as one of the market leaders both in electric vehicles and autonomy. The investment firm expects that Tesla will be a multi-trillion-dollar market in the next 10 years. According to Ark's CEO, Cathie Wood, Tesla could expand its overall addressable market tenfold if the automaker were to develop a product that could sell at half its current car price. Hello everyone, and welcome back to Everything Tesla Stock. In a recent earnings call held by Tesla, Musk addressed the issue of declining demand, citing that Tesla's demand is still at high levels. There have been a lot of questions about Tesla's demand in recent weeks. However, Musk has stated that he cannot emphasize enough how much Tesla's demand is growing. Musk stated that Tesla will have excellent demand for the fourth quarter of this year, and he expects Tesla will sell every car that it makes as far into the future as he can see. Cathie Wood is a huge fan of companies like Tesla, which are focused on disruptive innovation. The investment expert believes that such companies have the potential to make considerable exponential growth trajectories in the future. By combining lower vehicle prices with its already existing high demand, can Tesla reach 10 times its addressable market in 10 years? Let's find out. But before we start, if you like this type of content, make sure you hit that like button, subscribe to our channel, and turn on notifications to keep up to date on everything going on with Tesla. Following recent concerns about Tesla's car deliveries for the third quarter, Musk reiterated that Tesla has no demand problem, but is rather facing difficulties to secure vehicle transportation capacity at a reasonable cost. Tesla delivered 254,695 vehicles in the second quarter of 2022, significantly above the 201,250 vehicles that it delivered in the second quarter of 2021, its first time delivering more than 200,000 units in 3 months. This is pretty impressive owing to the several market challenges that Tesla has faced in recent months. Tesla's quarterly car production fell in the first quarter of 2022, the first drop since the start of the pandemic. The car company managed to triple its output during the first 2 years of the pandemic despite chip shortages and tough market conditions. Some analysts have also cited early signs of caution for the automaker, especially with its increasingly premium pricing at a time when the global economy is slowing. However, Tesla seemed to have navigated supply chain challenges better than most of its competitors, and analysts are starting to expect strong growth through to next year, as Tesla plans to expand output and make EVs more affordable. Although Tesla wants to make cheaper EVs, inflation and high demand for electric cars has led to car prices going up instead. The car company plans to build a next-generation electric car that will cost 50% less than the price of its Model 3. The automaker intends to sell this car model for $25,000. And Musk has said that Tesla was aiming to release this cheaper vehicle as soon as 2023. Although Musk had previously announced that Tesla wasn't working on the cheaper electric car in 2022, as its focus shifted to the Optimus robot and ramping up Model Y production, the automaker now seems to have gotten back on its plans for the new car model. During the conference call that followed the release of Tesla's Q3 2022 financial results, Musk confirmed that next-generation EVs are in the plans, and that Tesla has shifted its engineering power to developing the next-generation EV platform that's going to enable cheaper electric cars. According to Cathie Wood, if Tesla were to launch a cheaper option compared to the Model 3 and Model Y, its addressable market would increase significantly. Even without lowering car prices, there's still a high demand for Tesla cars. Its existing car models have been doing very well, topping several market charts in the past years. In September, the Model Y was named the best-selling car in Europe, receiving more new registrations than any other vehicle, including gasoline cars. In the first half of the year, Tesla's model occupied the top positions in sales ranking. The Model Y was the number one on that list too, with 103,215 units sold in the first 2 quarters. A lot of people want to buy Tesla and are looking for new products from the car company too. Although Tesla's fundamentals are getting stronger, this is not reflected in the stock price. Stock is currently undervalued, and this is what Cathie Wood and several other Tesla bulls believe. Earlier in June, when Tesla shares were down 38% year-to-date, RBC analyst Joseph Spack advised Tesla investors to buy the dip. According to RBC analysts, the near-term setup seems favorable for Tesla. He added that the automaker's early focus on vertical integration is likely to pay off, especially as industry supply of critical materials may become an issue in the coming years. Since Tesla has, to an extent, taken control of its supply chain, it may be able to stay afloat in these tough times. Following the recent drops in Tesla's stock price, Musk disclosed that Tesla may be doing a share buyback soon. The Tesla CEO hinted that Tesla could repurchase up to $10 billion worth of its shares next year. He stated that while it is certainly possible for the car company to do a buyback, Tesla does want to work through the right processes to do a buyback properly. Musk further hinted that even in the downside scenario next year, if the year turns out to be difficult for Tesla, the automaker can still do a $5 to $10 billion buyback. If Tesla can do a share buyback soon, it could increase the company's plunging stock price, taking the car company to a proper level of valuation. Tesla has a huge market advantage compared to many other companies in the industry. Unlike other EV companies, Tesla owns a whole autonomous ecosystem. Also, Tesla is king when it comes to collecting data. Tesla electric vehicles are known to have cameras and sensors that collect a vast amount of environmental data and transfer it to the company's servers. This data is then used to develop and refine its self-driving assistance systems, which Tesla sells to consumers as a value-added service. Tesla aims to turn its stream of data into a new service that triggers customer engagement or enables customers to get more from its products. Tesla's recorded enormous sales with its EVs, and with full self-driving in place, Tesla cars will continue to make waves in the EV market. Tesla has been on its full self-driving software for quite some time, and hopefully, the car company could be giving positive updates earlier than expected. According to Musk, the level of safety when a car is in FSD mode is significantly improved over when it's not, which is why Tesla has kept the technology in its beta phase to ensure that it is fully ready to be rolled out. During Tesla's Q3 earnings report, Musk claimed that Tesla is aiming for a wide release of its long-awaited FSD beta for all Tesla owners by the end of this year. Probably one of Musk's jokes, but we can never tell. Tesla is no doubt one of the best companies ever, with incredible technology and a huge interest for innovations. By facing several market challenges in these last few months, it's been forced to respond to a tougher market, without losing its demand. According to Ark Invest, there is no reason to fear a demand decline for Tesla. The investment firm wrote, "In our view, fears of declining demand for Tesla vehicles are misplaced. If anything, Tesla is supply constrained at current price points, and a $30,000 vehicle could expand demand tenfold. We would not be surprised if Tesla's next generation vehicle is a cyber robotaxi." Speaking of robotaxi, Tesla's vehicle may be closer to release than it was initially expected. In April, Musk disclosed during Tesla's first quarter earnings that Tesla will begin volume production of a robotaxi by 2024. According to him, the vehicle will not be fitted with a steering wheel or pedals, and will instead drive itself using Tesla's FSD software. If Tesla can solve this issue then, well, its robotaxi may quite possibly be set for production in 2024. According to Wood, some traditional auto analysts had deemed Tesla to fail. However, they didn't understand that Tesla is a robotics, energy storage, and AI company, not an auto company. What do you think about Cathie Wood's prediction though? Can Tesla make 10 times its addressable market value in 5 to 10 years? Let us know down below, and don't forget to tell us what your valuation of Tesla is. If you want to know more about what Tesla's been up to in the last few days, then go ahead and click on this next video on your screen. See you there!